Welcome to our channel for a deep dive into the latest global economic shakeup. President Donald Trump just announced a massive tariff plan from the White House Rose Garden. He's imposed a 10% baseline tariff on all U.S. imports, calling it Liberation Day for American industry, with higher rates hitting key partners, 34% on China, on top of existing 20%, totaling 54%, 20% on the EU, 24% on Japan, and more. Markets are tumbling and leaders are outraged. In this video, we'll explore how 10 major economies are responding, what it means for global trade, and what's next. Grab a seat and let's get started. In the U.S., Trump's tariff blitz is a bold, risky move to resurrect domestic manufacturing and shrink a $1 trillion trade deficit. The 10% baseline tariff hits everything from Chinese electronics to European luxury goods, while China faces a crushing 34% increase atop existing 20%, pushing the total to 54%. Foreign autos like German BMWs or Japanese Toyotas now face a 25% tariff starting April 3, 2025. Trump claims these will rake in trillions, but economists like Paul Krugman and Janet Yellen scoff, estimating just $300 billion annually, with warnings of skyrocketing consumer prices, supply chain chaos, and a possible recession. Wall Street's after-hours trading saw the S&P 500 drop 3.2%, Nasdaq tumble 4%, and businesses from Walmart to Boeing are panicking. Critics call it economic suicide. Trump supporters see genius. The truth? It's a high-stakes gamble with no guaranteed win. China's response is volcanic. Facing a new 34% tariff, totaling 54% with the existing 20%, Beijing roared that it's economic warfare and unilateral bullying. Foreign Minister Wang avowed resolute, forceful, and proportionate countermeasures, likely targeting U.S. soy, pork, tech like Apple, and energy exports. Shanghai's SSE Composite Index crashed 4.5%. Factories in Guangdong are halting production, and analysts predict China might devalue the yuan, dump U.S. treasuries, or slap 200% tariffs on American goods, recalling the 2018 trade war's chaos. Experts like Min Pei warn this could shave 0.5% off global GDP, disrupt supply chains, and ignite a firestorm affecting everyone from Walmart shoppers to Tesla suppliers, with no end in sight. 3. The EU, hit with a 20% tariff, is gearing up for a fight. Ursula von der Leyen branded it a direct assault on decades of transatlantic cooperation, vowing to shield 27 member states. Germany's auto titans, Volkswagen, BMW, Mercedes, are reeling, while French wine, Italian fashion, and Spanish olives face U.S. market wipeout. The European Central Bank projects a 0.5% GDP hit and 2% inflation spike, prompting emergency summits in Brussels. The EU's retaliation list includes U.S. Harley-Davidsons, Kentucky Bourbon, and Boeing jets. Diplomats are racing to negotiate, but if talks collapse, expect a trade war fracturing NATO, derailing climate pacts, and shaking global stability, with no clear winner. Japan, facing a 24% tariff, is in damage control overdrive. Prime Minister Shigeru Ishiba unveiled a $50 billion stimulus to prop up exporters like Toyota, Honda, and Sony, whose U.S. sales are 28.3% of revenue. The Nikkei plunged 3.8% as investors fear higher costs, lost market share, and supply chain shifts. Japan seeking urgent U.S. talks, avoiding retaliation to preserve alliances, but's also forging a regional pact with South Korea and China. Experts like Ishwar Prasad warn of long-term trade diversion, consumer price hikes, and strained U.S.-Japan ties, citing 1980s trade wars as cautionary tales. The outcome? Uncertain, but the stakes are sky-high. 5. India, hit with a 26% tariff, is navigating a minefield. Its $100 billion U.S. export market, pharma, textiles, IT services, faces disruption. Prime Minister Narendra Modi ordered rate cuts, subsidies, and trade diversification to ASEAN and Africa, but Mumbai's Sensex fell 2.8%, and businesses brace for inflation as supply chains shift. India's negotiating exemptions, but if U.S. talks fail, expect a 0.7% GDP slowdown, job losses, and higher prices. Analysts like Kaushik Basu warn this could push India closer to China's orbit, testing Modi's, make an India dream against global isolation, with no easy out. 6. Canada, dodging the 10% baseline but stuck with 25% tariffs on steel, aluminum, and fentanyl goods, is incandescent with rage. Prime Minister Mark Carney vowed swift, strong, and targeted countermeasures, eyeing U.S. lumber, oil, and corn. Toronto's TSX dropped 3%, the loonie weakened 2.5%, and the auto sector, including GM Canada, fears layoffs. Farmers and energy firms brace for U.S. retaliation. Canada's leveraging USMCA, but Trump's threats could spark a North American trade war, risking $700 billion in cross-border trade and testing the world's closest alliance, with no clear resolution. 7. Mexico, also under 25% auto tariffs and potential new hits, is in a tailspin. President Claudia Sheinbaum warned of retaliation, targeting U.S. corn, machinery, and electronics, as the peso crashed 3.8% and border factories fear closures. Its $500 billion U.S. export market hangs by a thread. Negotiations with Washington are desperate, but if tariffs stick, expect mass job losses, soaring inflation, and a peso meltdown. Experts like Luis de la Calle warn this could be Mexico's worst economic crisis since the 1994 peso crash, with no safety net as U.S. ties fray. 8. The UK, hit with a 10% tariff, is reeling from another post-Brexit blow. Prime Minister Keir Starmer called it a blatant breach of trust as British cars, whiskey, and fashion face U.S. cost hikes. The pound sterling fell 2.5%, and businesses like Jaguar Land Rover and Diageo fear sales drops. London's crafting a trade deal push, but analysts warn of 3% consumer price rises and 0.4% GDP loss. The UK's isolation deepens, with no Brexit buffer as global trade wars loom, testing Starmer's leadership and Britain's global role. 9. South Korea, facing a 25% tariff, is in full panic. Acting President Han Duck-soo ordered $30 billion in emergency aid for Samsung, Hyundai, and LG, but the won plummeted 4.8%, and Seoul's Kospi crashed 5.5%. Tech exports, 40% of GDP, are at risk, prompting WTO challenges and U.S. talks. South Korea is aligning with Japan and China, but experts like Young Tae-hyun fear a 1.2% GDP hit, with job losses, price spikes, and growth stagnation if the trade war escalates, leaving no escape. 10. Australia, fearing tariffs on iron ore, wine, and beef, is playing the long game. The government's preparing WTO lawsuits if hit, but markets in Sydney only dipped 1.5%. Miners like BHP and winemakers worry about inflation and trade shifts, so Canberra's doubling down on China and India ties. Experts like Warwick McKibben warn of higher costs if global trade slows, citing 1930s protectionism as a warning. Australia's stable for now, but with U.S.-China tensions rising, its future hinges on diplomacy, with no guarantees. That's our ultra-detailed, blow-by-blow account of how major global economies are reacting to Trump's tariffs as of April 2, 2025. From market meltdowns and diplomatic fireworks to economic forecasts of doom, the world is on a knife edge. China's gearing up for war, the EU's loading its guns, Canada and Mexico are digging in, and the UK's scrambling for relevance, while Trump doubles down, betting big on American exceptionalism. Will this ignite a trade war worse than 2018, or can cooler heads like those in Japan and Australia broker peace? The next month will be pivotal, with inflation, jobs, and global stability on the line. What's your verdict? Genius move or catastrophic blunder? Smash that like button, subscribe for more hard-hitting analysis, and ring the bell so you're first in line for updates. Drop your wildest predictions in the comments. We're dying to hear from you. Thanks for joining us on this epic journey, and stay tuned for the next chapter as the world holds its breath